The IRS in the United States will require cryptocurrency exchanges to report transactions within their platform. Over this past weekend, Bitcoin and other cryptocurrencies have surged aggressively. But is this rise really what it seems? The US Treasury Department has announced a new tax regime for cryptocurrencies that will take effect in 2025. This new regime establishes a reporting system for cryptocurrency intermediaries, in other words, for exchanges. However, it has also proposed the implementation of similar rules for non-traditional custodians, such as DeFi platforms and non-custodial wallet providers. The new regulations aim to improve transparency and accountability in the cryptocurrency space, ensuring that brokers report cryptocurrency transactions to the IRS. However, due to the complexity and rapid evolution of the DeFi sector, the Treasury has decided to allow more time before applying these rules to non-custodial entities, recognizing the unique challenges they present. Additionally, the delay in rules for non-traditional custodians allows for an additional period to receive comments and adjust the regulations as necessary, which could result in a more effective approach tailored to the specific characteristics of these platforms. It was clear that sooner or later the United States was going to tighten up on crypto taxation within its territory. This is something that was bound to happen, not just in the United States, but we will also eventually see this in Europe and the rest of the world. Notice how they also want to regulate the DeFi sector, but it is clear that at the beginning they have been unable to do so. It is not a simple task, but let there be no doubt that the IRS is seriously studying how to capitalize on the entire decentralized market. Now tell me, do you think the United States will manage to regulate the decentralized ecosystem? Leave your opinion in the comments. Regarding the Bitcoin chart in its 1 hour time frame, remember that we have seen how the price, through a bearish climatic action, has impacted a key defense zone. This defense zone, if well maintained over time, can lead to significant appreciations in the entire crypto ecosystem. And as of today, it seems that it is indeed being defended. That said, you will recall that in previous videos we have been observing this creek, and this micro creek as a form of compression. When the price was around this point, what we were evaluating was that the price would fall to then rise explosively. Let's analyze this strong downward impulse and consider the following. We might have a W here. This could be a timid weak E, and I'll give you a spoiler. We are going to evaluate the idea of a bullish Z. Honestly, from Crypto Insight, we can be very pleased as we are on a very good streak, understanding what smart money is doing in this market. And now we are going to share with you what we are thinking next. Well, considering that we have seen an upward accumulation at the price level of $64,320, we have identified institutional target number 1. This institutional target number 1 aligns almost perfectly with this level close to $64,500, which we consider critical. Understanding that the price has not yet reached its institutional target, it would be unusual for it not to touch it. Another consideration, of course, is whether it is well identified. If we then evaluate in a shorter time frame, like M15, we see that we are facing a complex corrective pattern that starts with this strong downward impulse. Here we see its corrective pattern with a W here, the Y here. Recall that from here we were already speculating that we would then look for this Z. In this complex corrective pattern that ends in a Z, we sought its wedge, which is essentially what needs to be done. And indeed, while it is true that the breakout was somewhat timid, somewhat sleepy, we then had to wait for strong aggressiveness to see a wedge breakout as expected. And this is basically what we have seen. Now, at the approximate price level of $62,718, we have placed the Z directive. Now, I will explain the importance of this structure in the Bitcoin chart, but first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Understanding that Bitcoin has broken its wedge with great aggressiveness and is now seeking the Z directive from Crypto Insight, what we do not want to do is turn the market around. We do not want to feel like the smartest kids in school, looking down on others, and we do not pretend to know when the price will turn around. In any case, it is much more prudent when we are facing a Z, not to bet on a reversal, but rather on its continuation. Therefore, considering that we have the institutional target of the entire accumulation process here, and that it has not yet reached the structure itself, we will then wait for Bitcoin to continue to rise until it reaches the target and/or the key structure. Here we would need to reassess and readjust the wedge differently and pay attention to the Z impacting a key structure which could indeed experience some kind of correction. We will read up to here. And regarding Ethereum, we must never forget that around the levels of $3,780, smart money has worked on a distribution to lower its price. This same group is protecting their position here as they do not want to see their institutional investment at risk and going negative. In other words, as long as smart money wants to remain bearish, it will be defending the area around $3,640. But hey, one might be wondering, wondering, why are you talking about such high levels if we're down here? Well, let's cross some information. In the end, we have identified a creek, which the price has already broken through with great solvency. The only way to break a creek is with great strength and solvency, and that's exactly what has happened. Starting from the idea that Bitcoin is in a Z and can continue to rise up to a certain limit where it would make sense to expect some kind of correction, even if temporary. Under this hypothesis for Bitcoin, crossing the analysis with Ethereum, we are seeing something very, very similar. So here, let's see if Ethereum is capable of defending the creek break, maybe with a small trap, but ventures to seek this defense zone. The first reaction doesn't necessarily have to be positive for an upward movement. Instead, it might be more reasonable to expect some minimal contraction. And that's it for now. Before taking a representative from the altcoins to see what they can do, and regarding Solana, it reminds us a bit of what we have already seen in Ethereum. Here we have smart money well distributed, which has driven the price down. On the other hand, we have been identifying a creek, a structure that we think could be key in the future if the market wants to rise strongly, potentially creating a black swan event. And now, if we zoom in a bit, considering Bitcoin, which is in a Z and can continue to rise, let's say that Solana can continue to rise too. It might even generate a sensation of creating a black swan, but as a trap within this structure. This provides an opportunity to initiate a small correction, and as I said, that's it for now. If you found this technical analysis and shorter video format interesting, let me know in the comments. Also, give this video a like, subscribe to the channel, and click the bell so YouTube can notify you of future posts. Good luck with your trading and see you next time.